All right, thank you for that. Yeah. Okay. So a buy stop is when the market is below your entry, when the current price is below your entry, and the market is going in that direction. So when you look at this particular chart, for instance, okay, the order is placed above the price where the market is. So what happens is you have actually marked out the charts and you know the market is going up. Or say, for example, if we're using if we're using the command console, for instance, and you get an alert and it says this thing is in the buy zone, right? If it is in the buy zone and you notice that the price is maybe is not where you want it to go in, the line, the command control line, let me give an example. Hang on. No, you can't see this one. I can't log in from here. Okay. I'm trying to break this down, guys, but let me know if I'm confusing anybody, please. Yeah. You have your entry. This green line is your entry. The price is below it. And you want to get in at this spot. Rather than enter from here. A lot of people will do this and enter from down here. They say, okay, why wait for me to get to this spot before I get in when the price is already down here? I might as well enter from down here and catch this number of pips since it is going in this direction. The reality is the thing might get to this spot and begin to reverse. All of us have done that. I've made them mistakes. Okay. But if you want to basically begin to start winning on a regular basis, you want to make sure you place a buy stop order here. So when the candle closes above that line, it is going to go up. Worst case scenario, it will pull back to that particular line and continue. Well, the market, the order will only get you into the market when that candle closes above that line. That is a buy stop. A buy limit, on the other hand.
Sorry, on a quick one.
Yes.
Will that not make you forfeit whatever profit you will have made here?
No, because your profit, you're calculating your profit right from this particular line to your take profit. This, as a matter of fact, is about the safest way of entering the market. Excuse me. It's about the safest way of entering the market. Why? Because it will only take you in once the candle crosses that line. And if you're looking at the 1 hour candle or the 30-minute candle for your entries, that candle needs to cross this line completely. And if it breaks through this line, okay, the next thing, you've heard of break and retest. It breaks a support, a resistance line, it will retest it and then continue. Break and retest. So it's not coming back down this way any longer. It is going up in that direction. All right. And that is what buy stop does. Sell stop, same thing. So the order is placed below, the market is on its way down, and you're looking at your trend because you need to know how to draw your support, resistance, and the trend line. So if the trend is a downward trend, you know this thing is coming down, but you don't want to get in at the top here. Why? Because there could be a pullback. Now, for you to avoid that pullback, you want to wait until it gets to this particular spot to get in. Your entries in the market is so crucial. Sometimes it could take you years for you to figure this thing out, I'm telling you. But the minute you figure this thing out and you get it to a T, then you are on a winning streak. Okay? But every now and again, you might have the market just because the market has got a mind of its own. Every now and again, you find yourself in that type of situation where you now have to start managing them trades and getting it back to where you want it to get to where you want to get to. All right. But most of the time, this will save you a whole lot of headache of drawdowns. Remember, we talked about drawdowns last week. So you want to keep your drawdowns to below 5% if you're trading a funded account and below 10% if you're trading your own account. Yeah. Same thing with sell stop. The limit orders, on the other hand, is different. The limit orders is when you notice that there's a pullback, not a pullback, like a change in direction. Okay. So it is coming down this way. Maybe the trend is up, but the thing is pulling back. And you know it's going to continue going up. Rather than get in at the top there, whereby you're now trading against the trend, What you now want to do is wait for it to hit the bottom bit of that pullback, and on its way back up, it will get you into the market. Same thing with the sell limit. Does this make any sense, folks?
So what you're saying, this is all referred to as pending orders, is that, yeah?
Correct.
Okay, thank you.
Correct. Any questions? Is this clear? Is this clear, guys?
Yeah, for me it's clear.
Yes, it
Please.
is.
All right, brilliant. Okay, now let us look at this chart now. Okay, this, how do you draw a trend line? Okay, these are the three major reasons for a valid entry, but it's good to know this. I'm covering this so that when you can either use this alone, practice to use this on your own, or you can use it in conjunction with the command contour. If you're using it in conjunction with the command contour, you're onto a winner. All right, this will come with practice, a lot of practice. Right. How do you draw trend lines? If you notice that the market, obviously we know the market goes in a zigzag form that way, right? If you are able to use the tools from your trading, from TradingView to draw a line, and you notice the line is going up like this, all you want is at least 2 touches. This is touch 1, this is touch 2. The more touches you have, the stronger the trend. All right. But if you're able to draw a line and it touches 2 positions like that, then you have a trend there. It could be an upward trend or it could be a downward trend. Okay. Either way, upward trend or downward trend, that could give you the sentiment of the market as well. So you know what you should be looking to get into. Are you looking to get into a buy position, or are you looking to get into a sell position? All right. That will help you. And again, by the time you're doing your research with the fundamentals, it will equally give you a sentiment in the market, and that will eventually solidify your decision in deciding your decision in the entries, as in what type of entry do you want to make. Okay. One other thing you want to look at as well is the resistance zones, resistance and support. Support will act like the floor. Resistance will act like the ceiling. If you notice, sometimes I say, okay, I'm buying gold to a particular spot, right? And somebody's asking me, but how do you know it's going to get there? This is how you know it's going to get there. Resistance and support. And gold will always go to where it's been before. Okay? If you see a zone like this, I call this liquidity zone. This is where the money is. If it has touched 1, 2, 3, and it hasn't broken through, guess what? And it hasn't broken this trend line as well, guess what? It's going back up there. But if it breaks a trend, if it breaks through a trend line, there's going to be a retest. That is when you hear break and retest. So there's going to be a retest before it continues. Now, when it continues, you could catch from this retest to this other spot there, you can catch 20, 30 pips. But if you're looking for long term, then you want to look for the correction. If it breaks through the correction, then you're going to be catching 100 pips, 150 pips. Okay. The good thing is you don't have to look for correction like this, like you have here, right? Why? Because the tool command contour has done all that for you. So all you need to do is from one command contour line to the next command contour line is usually 50 to 100 pips. So it's already done all that stuff for you. But if you don't have command contour, for example, and you want to practice this, you can practice this on your own, guys, and trade this on your demo accounts and see how it goes. You will eventually master it. Yeah. It pulls back up to this zone here. This used to be, okay. All right. if you're able to draw another support line, this was a support that eventually became a resistance. So you pull back to that zone and then it dropped. It broke this tiny correction zone here and bam, it went all the way through. If I'm to draw another line here, I will draw one from right here across. Okay, that is another support zone. Now that it's broken that support zone, what am I expecting? I'm expecting it to pull back to that support zone and continue downwards, depending on the chart that you're looking at. All right. So at least 3 reasons for a valid entry is resistance, trend line being broken, and correction being broken also. You can enter from here, resistance or support, if you're buying or selling, depending on which direction. You can enter from when a trend line is being broken and there's a retest, you can get in, or you can get in as well when a correction has been broken. All of this stuff, the command control has done for you also. But again, it is important for you to know what the fundamentals is saying before jumping into the market. Does that make any sense, guys?
Yes, it does.
All right. Any questions? Nope. All right. Let's move on. I was going to go through. Okay, let me go through this one. This is another important one. So for those of you that are trading on your own, right? Fear makes you sell too soon, and greed makes you hold on too long onto a trade. Sometimes you might find yourself in a situation where you need to hedge your trades and manage it so you can get out of it without losing the account. That is another training altogether. I will teach that at some point, how you can save your accounts if you notice that the account is heading in the wrong way, and then you can manage it and come out of it. You'll lose a bit of money, but you can now recover all that you have lost at some point. Just give yourself about a week or two. Okay. But this is exactly how not to hold on to a dead trade for too long. You got to know when to knock it off. You can lose a bit, just continue, or lose something and continue, or just stay in there. This will act as a resistance. I told you resistance is like the ceiling, which is the top, and then support is at the bottom. When you see the market, this is the pricing, this is the time. You see the market moving up and down. Now the market has gone up this way, all right? And maybe you didn't see the signal, or you didn't see it move. If you had seen it at the bottom here, that's a very good time to get in. One tool that you can use to do this, or that can help you with this, is the RSI. The RSI, remember we spoke about the RSI the last time. The RSI, once you notice that blue line is at the bottom, which is the 70 mark, you should be getting in for a buy. If it's at the top, which is the 30, I don't know which one is 30 or 70, I can't remember now. But if it is at the top,
sorry, it's the other way around.
It's the other way around. Okay.
Yeah.
So you have the 30 line at the bottom. If it's at the bottom here, this is when you want to get in for a buy. If it's gone halfway, no need. All right. You might as well just wait for another opportunity for it to come down, because whatever is going up must come down. So if you're scalping, that is a good tool for you to use. If you're scalping 10 pips here, 5 pips here, 20 pips here and there, it is a good tool to use. All right. If you're catching 20 pips 5 times, that's 100 pips. You can do that. That is another trading style. All right. That you can do to, catch up. But you need to sit in front of your computer for that period. You could just set out like 2 hours. All right, I'm going to trade for the next 2 hours, and you're just catching your 10, 20 pips here and there. Fine, you can do that. Okay. And you can still make money doing that as well. So if it has gone up to the bid there, now somebody who's not trading with the RSI or who does not know will see, oh, the market has gone up. You know what? Gold is buying. Bam, everybody jumps in. But you're jumping in at the wrong time. Why? It's about to hit a resistance. And when it hits that resistance, if it doesn't break through this resistance to retest and continue on that journey, there's going to be a pullback. It's going to come back down. Now, you enter that this way, it's beginning to come down. Your account is in the negative. You're looking at a negative. You're looking at a negative. You don't know if the negative is going to continue, in your head, you're thinking, you know what? This negative is going to continue, you know. You're still coming down, and then you jump out of here because of panic. Every new person does this. I have done it. Most of you here would have done it as well. All right. You jump out of here. Why? Because you see that the red is growing and you don't know if it's going to go back up. But you did not check that this has got, the trend is on the upside. So no matter what, it's still going to continue going up. You didn't check that trend. You jumped out here. And the minute you jumped out, what happened? The market began to go up. And then you're biting your finger thinking, oh, geez, I should have jumped in here now. I should have jumped in here. All right. Or, okay, you enter this bit here. And again, over here, you're exiting because of fear. All right, I've said to jump in here. It's gone up here, but I don't know if this thing might just repeat it. You might just repeat that same move again and come back down. I get out of here, not knowing that this is the move that's going to break and retest this and continue. So you don't know. But how do you know when it breaks through and when there's a retest? You can check it with the candlesticks, because every pattern with those candlesticks speaks a language. If you don't understand the language, you won't know what is being said. Right? The candlestick patterns I'll cover at some point. But let me show us. I'll probably do that next week. Okay. These are candlesticks. Yeah. All right. Okay. You know what Zoom has started doing now? If it logs us out, we can't log in immediately. We have to wait for 10 minutes to come back on, you know. That is what Zoom has started. So if this thing logs
they're
us
smart. They want us to upgrade. So
they want us to upgrade, exactly. They are smart now. They are smart now. Okay. So the candlesticks, right? These are candlesticks. The green obviously is a buy candle, the red, a red candle. For the red, this is the open. So where it started is here. There is open, there is the close, there is the high, and there is the low with the normal candlestick formation. However, if you want to understand, you can learn how to trade with this, but if you now understand how the Heikin Ashi candle works, it cuts out a lot of noise. Okay, and you know, the Heikin Ashi candle tells you about the trend. It gives you information about the trend and if you should remain in that trade without drawing support and resistance lines. Okay, but here, so now we know these are wicks. These are called wicks. Yeah, same thing. That's a close for a sell candle. That's a close. That's the open. So it opened from here. It pulled back down a little bit. It went up. It closed here. Then this one opened over here, went up, but came all the way down, closed here. It went down to the lowest bit, pulled back up a little bit and closed. That is the way the candles operate. You need to understand engulfing candles. Even if this is just the only pattern you see out there and you know, it will help you with your entries as well. Engulfing candles are when you notice a candle engulfing the other one. So if a green candle is engulfing the red one, it's telling you that, you know what? Yep, you're ready to get into that trade or a buy. And if the other one is engulfing for the red, I mean, if it is a red candle, which is a sell candle engulfing the buy candle, get ready to jump in for a sell. But now the question is when and where do you jump in? The two candles must open and close, must open. One has closed and the other one is opening at the same position. But now it is growing longer than the other candle. That means it is engulfing it. Once this candle closes and it is longer than the other one, but they all started at the same level, that's an engulfing candle. You want to get in where that candle closes. Does that make sense? Hello?
yeah.
Did you get that? Did you guys get that?
I'm listening. I'm listening in bits and pieces because as you know, I'm actually at work, so I can't comment quite a lot. But I'm listening to everything that you're saying. I'll have to listen to this whole message again because I see that you're recording.
Yes. Okay. Let me look for an example. Let me look for an example. Okay, now let me use CardJPY. Okay, let me close this one. Oh, I got 5 minutes left. This thing's probably going to knock me off. Okay, let us look for an engulfing candle. You see, to 1 hour here. All right, here we go. That's a sample of an engulfing candle. Let me see. Guys, you see this here? Where is it? I saw it here somewhere. This one. Oops. You see these two candles here? This green one and this red one. I might just remove this. This is blurring my vision. This green one and this red one. This green one and this red one. This has engulfed this, engulfing candle. So where this one has stopped here is longer than this green one, but at the top, okay, this one started right here, closed right here. Sorry, started right here, closed up there, and the red one started at the top there, and it closed longer than this one. This is an engulfing candle. This is where I will enter this trade. So I enter this trade right here. Where is it now? I enter this trade right here. It ranges, it goes up, and it falls all the way. And it falls all the way. Falls all the way down to here. So if I had entered this trade right here, I would have caught 136 pips from just this move. Why? By just knowing when to get into this trade. I saw that pattern. I knew definitely I should be entering this trade. This is without command contour. Now let me see what command contour is saying. Bam, command contour is giving us an entry right there. Oh my days. Sheesh. Guys, you see that?
Yeah.
Oh my days. This is wicked. Okay. And command contour gave us an entry right there. Right there. So folks, even if this is the only thing you pick up from tonight's session, go back to your trading view and start looking for engulfing candles. Practice that this whole week. That is all you want to see. 1 hour chart, look for engulfing candles. Mark it off. That's your entry. Okay? That is your entry, and then take it out. How do you know when to get out? All right? How do you know when to get out? Support and resistance. You see here, it has touched, it's touched, it's touched. This is a zone. Always look left. Always look left on your charts, yeah? Always look left. Remember, this bit hasn't formed yet, yeah? So you're looking left. It has just gotten to this spot. You've taken an entry there. This bit down here hasn't formed. So you're looking for when to get out. I'm looking for when to get out. This zone here is a support zone. Why? Because it was a resistance at some point. So I will put a line right here. Okay? I will put a line right here. And what happened? When it started coming down, it stopped right there too. That's going to be my first port of call. And then my next port of call, I'm going to look at down here too. Left, I put it there. That is another port of call. So I have 2 TPs. I change that to blue. I change that to blue. These are my 2 TPs. Guys, I've got less than 1 minute, so I'm just hurrying up. Unless we jump in after 10 minutes, guys. I don't mind. I'm out here. So if I enter this trade right here, bam, that's 46 pips. Down here, bam, that's 107 pips. Done. Now let's see what command control is telling us. Bam. What am I saying here? Good. I'm not far off at all. This green line is an entry, is your take profit. This zone actually is your take profit. Again, you have another one down here, zone, take profit zone. So therefore, I would basically, this is a zone to take my profit, and this is another zone to take my profit. Awesome. This is how good that command contour is. And if you know how to mark out your charts without the command contour, and you now use the command contour to check out what you're doing, guys, you're onto a winner, man. Wow.
When we come back, I'm going to be asking my question.
Okay, yeah, less than a minute. Let us just continue until it knocks us out, man. Then 10 minutes, we come back on. After 10 minutes, guys, yeah? Because this thing will not let us jump on immediately anymore. All right. Absolutely phenomenal. Now here, again, if you want to draw your trend line, what are you looking for? You're looking for how many touches? Minimum of 2 touches. Minimum of 2 touches. I look for this trend line. This is a trend line. These are tools here. I hope you know how to use them tools.